Gold prices have been on the rise over the past year, and if you have been keeping an eye on this trend, you might be wondering, should I invest directly in gold, or is there a smarter way to ride the wave? Enter the idea of a gold proxy, a company whose stock performance tends to move in tandem with gold prices. This usually happens when gold is a key material in the company's business. The logic goes like this: if the company uses gold and gold prices go up, its earnings might go up too. And since stock prices often reflect earnings, multiplied by market sentiment, you might see even bigger gains. Plus, unlike gold itself, stocks pay dividends. Sounds good in theory. But does it hold up in practice? Let us take a closer look at Pokong and Tomei, the two gold jewelry retailers listed on Bursa Malaysia. Pokong Holdings is the country's largest jewelry retail chain, involved in everything from manufacturing to retailing gold jewelry and investment products. Tomei Consolidated, on the other hand, is also a vertically integrated player, with retail brands like Tomei and Gold Heart. To see if these companies are effective gold proxies, I compared their stock prices and business performance against gold prices over the past 15 years. On a year-end basis, the correlation between their stock prices and gold was not significant, certainly not strong enough to be reliable. I used 70% as a benchmark for significant, and Tomei just made it. So, what if we zoom in a bit? I looked at 10-day intervals over the past 4 years. And here, the relationship was clearer. Stock prices moved more closely with gold in the short term. But what about their fundamentals, things like revenue and profit? Again, I looked at annual figures over 15 years and found that the correlation with gold prices was not strong. The reason? These companies are not just selling raw gold. Their success depends on design, branding, and consumer spending, and not just the price of gold. This is quite different from oil and gas companies, where the price of crude directly impacts revenue. Or even steel companies, where input costs and product prices are more tightly linked. So, what is the takeaway? In the short term, yes, Pokong and Tomei do show some correlation with gold prices. But in the long run, their business performance is driven by other factors. That said, which would have given you better returns? Between 2019 and 2024, both Pokong and Tomei outperformed gold in terms of total return. It makes sense, these are strong businesses with growing profits. And those profits translated into stock price appreciation and dividends. So, are Bursa Malaysia's gold jewelers good proxies for gold? Not exactly. But if you are choosing between investing in gold or these stocks, the numbers suggest you would be better off going with the jewelers. The contents in this video is for educational purposes only. Do you want to learn more about how to identify such stocks with the fundamental mapper? Scan the QR code to access it on the Sifu app. Thank you.